So welcome to this interview today. I have the great pleasure to welcome Ali Hauser. He's worked for many years in the oil and gas industry and has a huge experience in captives. What are captives? What is insurance? And basically, what does it mean to buy insurance? That's the topic for today's interview.
Thank you, Philip. Glad to be with you and to share these comments with your audience.
Great. So Ali, can you just first explain us what was your experience in a captive and what did you do there?
I worked in the National Oil Company of Mexico, Pemex, between 2004 and 2018. And concretely, between 2012 and 2018, I was responsible for the risk management of the company and of the handling of the captive domiciled in Zurich, which led me to touch upon many of the areas that create risk in the company, and specifically how to deal with that risk, how to manage that risk. Clearly, insurance being one of the main elements that we have to deal with to cover this issue.
Okay, so basically you were heading a captive. What is a captive? What does it mean?
Well, in order to understand a captive, you have to understand first that this is a specific vehicle for a company to be able to achieve a couple of goals. First of all is to know your risk as much as possible. That is one of the important strengths that is derived from a captive. The second one is to be able to have a good exchange with the international reinsurance markets with a very thorough presence in the markets, because you go there to negotiate on a year-to-year basis the renewals of your policies, but also because as an entity that understands well the risk of its mother company, you are a great promoter of the risk of your company. So I would say the captive achieves many objectives. It's a company that is owned by an insured. In this case, the captive was owned by the National Oil Company. And it is a tool that you use as a step between the local insurance company, where you have to insure your risks, and the international reinsurance markets. It's a step through which you go to be able to decide which risks you want to reinsure and which risks you want to keep in your belly, and knowing that you have an appropriate premium to cover them.
Okay, and if I, as a layman, for example, in insurance, could I summarize this as saying that a captive is basically an internal insurance company?
You could say that. You could say that it's equivalent to having your own insurance operation. Certainly not with the extension of a full-fledged insurance company, but in terms of compliance and in terms of actuarial work and solvency considerations, certainly you could say that.
Okay, so as such, having a captive representing such a big group, oil and gas group, I guess you were quite a substantial buyer of insurance.
Indeed, Philippe, one of the things we have to take into consideration is that the energy market is larger than the insurance market. So that already gives you a hint of the size of the risks that you handle. You have refineries, you have platforms, you have pipelines, but I think all and every company has to take into consideration three main risks: the risks of its human resources, its persons, that's number one; the risk of its assets per se; and the interaction between these two, which is the responsibilities that emanate from that interaction. So that brings up coverages such as third-party liability, etc. And on the asset side, you could think of about the I always call it the mother of all risk, which is a property risk. And in terms of the most important, the people, well, you have life insurance, health insurance, which are important components of this mix. So that already gives you the first mosaic of the type of risk you have to cover.
Okay, and so who are large insurance buyers on the market? Do you have some examples?
Well, certainly oil companies, national or private, are important purchasers of risk, but you have also companies that do distribution, companies that work into the food chain, have to protect their crops, have to protect the agriculture, you name it. I mean, if you stop one moment to think about it, you'll see how much risk is embedded in all of our day-to-day activities. So big places of risks are really throughout the food chain, the car industry, the energy industry, but also the service industry. I mean, sometimes something can go wrong in a distant location, geographically speaking, and still have an effect 10,000 kilometers away, because you just didn't get specific part of the chain that you imagine a car company in Germany that has to manufacture something in Japan, and suddenly an earthquake cuts that supply. You'll have a problem of delivering the cars in Berlin because of something that happened in Japan. So you have to cover for that. You call that business interruption.
Okay, so does that mean that most of these large companies we all know, from different industries, do they all have a captive?
No, not necessarily. Some companies choose to self-insure. If you remember the famous BP accident a couple of years ago, BP was not running a captive. It chose to have a scheme on its balance sheet to deal with that, and it was just not enough. So they had to also sell some assets, etc. That's an example of a company that didn't have a captive. Many times, companies do not have a captive because it's a bit complex to understand at first. And however, as long as you have an important amount of expenditure of premium on a year-to-year basis, it's really worth considering to open such type of vehicle, because you get to keep a lot of the I would say premiums that otherwise would end up in the reinsurance markets. But it's also a tool that helps you negotiate better when you need to collect from the markets as well the monies for a claim. And it also gives you the possibility of putting pressure into the insured, your owner, to make sure that they are, and I think this is an overlooked factor that is fundamental, to ensure that they are carrying out operations in a way that is tied to the best practices, that is constantly keeping an eye on the way the process is run, and that you are based on practices that allow you as a risk manager to sell the risk of the company. That's something very important the captive does. It allows you to become a seller of risk rather than a purchaser of policies, because you now have a story to tell that you know well.
Now, you just said the word rather than a purchaser of policies. That's actually the question I would also have for you. As the CEO of a large captive, you had to purchase insurance. You had to purchase policies. What was the major challenge when buying insurance policies?
I think it's pretty much tied to what I was just mentioning, Philippe, in terms of being able to convey to the markets that you are a company that is taking care of its risks, that you don't represent a huge risk because of your good practices in terms of loss prevention, in terms of how you're operating your facilities, in terms of the fact that you hear the reinsurance markets, and that's something that the captive also gives you, is having a pulse on the reinsurance market, where you have a pulse on your own company and understands its risk. Why did you have more mortality in X and Y or Z area of your company? Why did you have more accidents related to mechanical integrity? Why did you have a rise in pipeline failure, etc.? I mean, if you can answer those questions, if you can tell them why you have a certain atypical thing going on in your platforms, etc., at the end of the day, it comes back to communication. If the captive is a tool of communication with the reinsurance market, because for them you're the first face they see of the company, and for the company you are the first face they see from the reinsurers. So you have to kind of place yourself in that situation, which is not always easy, because sometimes they want to claim and be very vocal against you, because you say, are you part of the company or are you part of the reinsurance market? And the reinsurance market doesn't trust you as a reinsurer, because they say, are you part of the reinsurers or are you part of the company? So it's it's not an easy journey, but I think as you go along and you are able to establish good communication channels, and at the end of the day, you establish trust. And trust is fundamental to buy and to purchase or insurance, and from the perspective of the reinsurance, to sell insurance. So in a way, I think in order to purchase insurance, you always have to understand what is important for the seller of insurance, and what is important is, if you're gonna put your name and you're gonna underwrite the risk of that company, you want to make sure that it's a risk that is well catered for, that people take care of it, and that you will only have certain outlier situations where things will go wrong. But if you have risks where you know that it's not when it's going to happen, but sorry, if you know that the risk is going to happen, it's just a matter of saying when it's going to happen, but then you will charge accordingly. But if you have a certainty that all best efforts are being done to avoid that risk, then you will say, okay, I'm ready to take that risk, knowing that there's a very few chances that it will materialize. So it's part of this exchange where you show the reinsurance, and you also have a dialogue with your owner to ensure that they are acting in a responsible way. They are taking care of the risk at each step.
Okay, so it sounds like you liked it, or was it nice? What was nice about running a captive? Was it interesting to buy insurance? What did you like?
Listen, it's a fantastic experience in terms of the fact that it allows you to touch upon all of the company. It forces you to understand your company fully, where it is going strategically, how is that strategy materializing into day-to-day activities, and to be able to take that to the insurance markets, which are markets that have been out there for the last 300 years, and be able to explain that in a way that is understandable, and that allows you to place the risks, and to at the end of the day, the objective is to keep the company on its feet when something wrong materializes. So I think it's very exciting, but it can also be stressful.
I can imagine that. I can imagine that. So besides the stress, would you have any tips or tricks for other insurance buyers? Any advice for them?
Well, my advice, I would say, like any type of purchase, is you have to know your product. You have to know what is out there. You have to understand what's your position in the market in order to be able to establish where you stand among your peers, and that also allows you to always adopt the best trends to be able to place yourself as an interesting risk for the reinsurance markets. Again, if you're just going out there to purchase a policy, what's the interest of the insurer is to sell, and for me it is certainly to buy, but I want to buy what is necessary, not less and not more than what I need. So that's the other point. If you understand well what the risk is, you'll know what it is that you need to purchase, and then again, when you start using the captive more effectively, you also start retaining risks. You also have capital in your captive to take care of some risks. You have to understand the frequency and the severity of the risks are the two main, I would say, pillars of your negotiation with the markets.
So it sounds like what your advice is, you need to know basically your risk. You need to know your company, and you need to know obviously the market and the kind of products which are offered on the market. Is that a fair summary of the two?
I think it's pretty much it is, Philippe. Know thy market, know thy product, and know that your company.
Okay. Now I would like to jump on the other side. Now you talked from the buyer's perspective. What kind of advice would you have? Because you've met a lot of insurance salespeople from around the world over all these years. So what would be your advice to these people, to the insurance salespeople? What would you tell them?
No, I think it's not a one-way street. It's a two-way street. You have to know your client. I mean, reinsurers are always eager to better understand who they are dealing with. They will often go and check as a first resource your web page and anything that is on there that is able to give them more information. But that's just like the basic step. They will certainly ask the brokers to come and deal with the client for information on what has been done on loss prevention. They also have many times their own engineers going at the premises to check what has been done in a specific realm of the let's check, for example, in the case of the oil company, let's check how the fire alarms are doing. Are they up to date? Are all of them functioning? Let's check if we have a proper procedure to restart a certain machine when it goes off. Many of the accidents happen when you restart the machine. So do we have a proper who is doing that? Are they doing that during the weekends when most of the senior engineers are on holiday, or are they doing that during the week when you are sure that it sounds like small details, but the devil is in the details. So they will always look to find out what is being done, how it's being done, and you can do that. I mean, I always favor an approach where you go and see what you're insuring. I mean, you go and see what if you're gonna pay a claim, you better go and send your adjuster to tell you what the claim is all about and to understand as much as you can the situation, the context, to be able to price it properly. So that's my advice for the sellers of insurance. Is also know your client, understand the context. But you know, I mentioned as a first step, go to the web page, but by no means stop there. I mean, that's really the list of the efforts. You really have to go and talk to people and understand. And if you can travel and see for yourself what they're talking about, that will always give you not only an understanding of the assets, but as I mentioned at the beginning of the conversation, an understanding of the people, which at the end is what makes or breaks a company.
Okay, so what I understand from you is really basically you should put your hands in the dirt in a way. You need to go and understand the company, the people, the risks that are there. You need to understand your clients to do a good job there. Okay, well, that was a very, well, we don't have that much time, but it was a very enlightening discussion for me. So I would like to thank you very much for this, for your views on that topic. And I hope it will be helpful for the people learning how to sell and how to buy insurance. So thank you very much, Ali, for your inputs.
Thank you, Philippe.